Hello everyone, welcome to my channel. Today I'm going to talk about how much should you really pay in taxes. Let's get into the video. Taxes are a part of life, but one of the most common questions people ask is, how much should I really be paying? The answer isn't as simple as a fixed percentage. What you owe in taxes depends on several factors, including your income, filing status, deductions, credits, and how your income is earned. Understanding how taxes work can help you determine whether you are paying too much and what you can do about it. Understanding the progressive tax system. In the United States, the federal income tax system is progressive. This means you are taxed at different rates depending on your income level, known as tax brackets. Contrary to popular belief, not all of your income is taxed at the same rate. For example, a portion of your income may be taxed at a lower rate, such as 10% or 12%, while a higher portions are taxed higher rates, such as 22%, 24%, or more. This structure ensures that people with higher incomes generally pay a larger percentage in taxes. Because of this system, your effective tax rate, the average rate you pay across all your income, is usually lower than your highest tax bracket. What is a normal tax rate? There is no universal correct amount of taxes to pay, but there are general ranges many taxpayers fall into. Low to moderate income earners may pay between 0% and 15% effective tax rate. Middle income earners often fall between 10% and 20%. Higher income earners may pay 20% to 30% or more. These are rough estimates and can vary widely based on deductions and credits. The role of deductions. Deductions reduce your taxable income, which directly lowers the amount of tax you owe. Common deductions include standard deductions available to most taxpayers, mortgage interest, student loan interest, retirement contributions, business expense for self employed individuals. For many people, the standard deduction alone significantly reduces their taxable income, lowering their overall tax burden. The power of tax credits. Tax credits are even more valuable than deductions because they reduce your tax bill dollar for dollar. Some common credits include child tax credit, earned income tax credit, educational credit, energy efficient home credits. Credits can dramatically reduce how much you owe and in some cases even result in a refund. W 2 versus self employed taxes. Your income tax also plays a major role in how much you pay. W 2 employees have tax automatically withheld, including Social Security and Medicare. Employers also pay a portion of these taxes on their behalf. Self employed individuals, 1099 earners, on the other hand, must pay the full self employment tax, which is approximately 15.3%. However, they can offset this with business deduction. Because of these differences, self employed individuals may initially feel like they pay more, but strategic tax planning can reduce their overall tax liability. Are you paying too much? Many people overpay taxes simply because they do not take advantage of available deductions or credits. Others may have too much tax withheld from their paychecks, resulting in large refunds. While getting a refund may feel like a bonus, it often means you have been giving the government an interest free loan throughout the year. Signs you may be paying too much include large tax refunds every year, not tracking deductions or expenses, lack of tax planning, not contributing to tax advantage accounts, how to reduce your tax burden legally. Paying taxes is required, but overpaying is is optional. Here are a few ways to reduce your tax bill legally. Maximize retirement contributions. Contributing to a retirement account like a 401k or traditional IRA can lower your taxable income. Track all eligible expenses. If you are self employed, tracking business expenses can significantly reduce your taxable income. Use tax credits. Make sure you're claiming all credits you're qualified for. They can have a major impact on your final tax bill. The next thing to do is adjust your withholdings. If you consistently receive large refunds, consider adjusting your W 4 to better match your actual tax liability. The next thing is plan ahead. Tax planning throughout the year is more effective than trying to fix everything at filing time. The goal, pay what you owe, not more. The goal isn't to avoid taxes altogether, it's to pay the correct amount. Paying too little can lead to penalties, while paying too much means you are not using your money effectively. A well informed taxpayer focuses on accuracy, compliance, efficiency, but understanding how taxes work and taking advantage of available strategies, you can ensure you're paying what you truly owe and nothing more. My final thoughts on this is, so, how much should you really pay in taxes? The honest answer is it depends. Your ideal tax amount is based on your income, deductions, credits, and financial decisions for a deal. The key is not just filing taxes but understanding them. When you take control of your financial picture, taxes become less of a mystery and more of a manageable part of your overall strategy. With the right knowledge and planning, you can reduce your tax burden, increase your savings, and build a stronger financial future. Thanks for watching this video and do not forget to subscribe to my channel.